There's an ongoing debate between traders about what is better, fundamental or technical analysis. Both have their advantages and disadvantages, and in this video, we'll be helping you decide by looking at both sides. Which one should you choose? First, let's look at what they are. Fundamental analysis seeks to determine the fair value of an asset. This means a company's assets, liabilities, and management will all be factored in with a fundamental analysis. In addition, you would also evaluate the overall condition of the wider economy. However, when using technical analysis, we're only really interested in the movement of the price, i.e. how it behaved in the past. Thanks to this information, we're able to determine the likely future movement of a company's price, currencies, or other financial assets. Technical analysis is based on three main principles. Number one, the market discounts everything. The current market price takes into account all available information about a given security, the micro and macroeconomic situation, as well as political and economic conditions. Number two, prices move in a trend. Prices follow specific trends, upward, downward, and horizontal, until there are clear signals indicating a trend reversal. And three, history repeats itself. Technical analysis focuses on predicting future price movements based on history. This assumption is based on the repetition of certain patterns over time. While a fundamental analysis focuses on long-term returns, a technical analysis focuses on optimizing a short-term trade. Short-term traders will use a technical analysis when they want to optimize the returns on a trade. By preempting a price movement based on past trends, the trader may be able to find the best entry or exit point for the trade. Technical analysis uses a variety of strategies to determine value, such as moving averages, Fibonacci retracements, and Bollinger Bands. So which one is better? Well, they both have their pros and cons. Here are the advantages of fundamental analysis. It is ideal for identifying long-term trends in an asset class, or wider sectoral trends. Identifying this underlying value can increase confidence that an asset will reach that value over the long run. Fundamental analysis can also have short-term uses, particularly when earnings are released. A strong fundamental investor may be able to identify if a stock's movement is fair based on reactions to the latest financial data, and then spot an opportunity to sell or buy shares accordingly. However, there are also some disadvantages. It's not most useful for a day trader outside earnings season. Most short-term movements in a stock depend on irrational factors like market sentiment. It is also difficult to use a blanket approach to fundamental analysis because sectors have different characteristics that make some more prone to hitting their fair value than others. Fundamental analysis also relies on subjective information, particularly around macroeconomic data like expected interest rates or taxation policy. Surprise earnings can also suddenly upset a stock's fair value, so it's not a passive option, and a value-based portfolio requires regular reassessments. Now, moving on, let's look at the pros of technical analysis. Technical analysis is critical in identifying the appropriate entry and exit points for a trade to maximize returns due to its focus on price movements. Technical analysis can also sometimes become a self-fulfilling prophecy. If enough traders are following the same technical indicators to make trades, it can drive enough volume to that action to influence the asset's price as hoped for. Being able to accurately identify different technical phenomena accordingly allows a trader to preempt a market move. However, there are also some cons to technical analysis. While technical analysis helps investors identify trends that might be replicable, it is far from foolproof. All assets are prone to shocks from internal and external factors that can't be predicted by previous price movements. Traders should ideally use a wide range of indicators before making investment decisions and rely not solely on technical indicators. You should also keep in mind that past performance is not a guaranteed indicator of future returns. As you can see, both fundamental and technical analysis have both pros and cons that may benefit different people at different times. If you're still wondering which one is best for you, depending on your time horizon and investment goals, it will be best to combine both techniques and use them together. If you'd like to learn more, XCB's Learn to Trade Academy includes over 30+ hours of free educational content in addition to a market analysis, articles on all about trading, and in-depth ebooks on fundamental and technical analysis. Subscribe to XCB to learn more about trading and investing.